Everyone's calling it a hawkish pause, which basically means Federal Reserve Chairman Jerome Powell looked as stern as he could while leaving rates on hold. But this here is the toughest statement I could find in his press conference, that they're prepared to raise rates further if appropriate, which is what the Reserve Bank of Australia said the other day, and it's another statement of the bleeding obvious. What markets were looking at, though, was the dot plot, which is where all 19 members of the rate-setting committee make predictions about interest rates anonymously. Each dot is a prediction, and 12 dots for 2023 are sitting above the current target. So most of them think, anonymously, that there'll be another rate hike this year. Beyond this year, as you can see, most think there'll be rate cuts. I think they're quite worried about the oil price, which seems to be heading for $100 US a barrel, because Saudi Arabia and Russia are cutting output. Central banks can't do anything about that, but, you know, they've got an inflation target, and it really doesn't matter what causes it. Punters were mostly betting the wrong way earlier and selling the US dollar before screeching into a U-turn and then buying, with the result that the Australian dollar hit 65 US cents briefly and is now back just above 64. Share markets everywhere took a dot plot hit, including Australia's, down more than 1%. Transurban dropped 3.7% after the ACCC said it's not allowed to buy the Eastlink toll road, so obviously the right decision. Asian markets all fell more than 1% today, and oil and gold both slipped a little last night, while iron ore and copper went up. And that's finance.